Hey there, folks. Welcome back to the channel. So this video tonight could potentially ruffle some feathers. And those of you watching should feel very honored to begin with, because I actually am reshooting this video because the article I'm going to go over doesn't quite get everything right, but I'm still going to use it. But I'm going to show the correct results for what the article is claiming, if that makes sense. So, and this should also really rile up those of you dividend haters. I think you'll really like this, and dividend lovers will also really like this one. So hopefully I can kind of unite the audience. That's always my goal, unity and harmony, more or less. With that being said, so today I want to go over how a growth stock that pays a really good dividend has outperformed Cathy Wood's ARKK Innovation Fund, which I've never talked about on this channel, but officially now I'm going to. So the ARKK Innovation Fund has been absolutely crushed over the past 6 months, 6 to 8 months or so, since last year, when it was all over the news. I mean, I think every YouTuber last year was talking about it, but it's been beat over the last 12 months, and especially over the last 6 months, by a stock that I'm going to show you here for an evil oil company known as Exxon Mobil. And some of you might have been able to look at the chart beforehand, or my label on the video or the screen share, and you might have seen, or you might have known what company this is. So the key concept, key takeaway of today's video is how, in the long run, growth stocks are more stable and very often outperform emerging stocks that don't pay a dividend. Because remember, total stock return, when we talk total stock return, is the dividend plus what the stock appreciates in value. That's the total return. So, and the $3.52 dividend that Exxon Mobil pays is, right now, it's a 4.13% dividend, but it was a 6% dividend. So the article I'm going to reference today makes a lot of good points, but it's not quite right on what it says. It says that Exxon Mobil has appreciated 95% over the past 13 months. And I disagree, because I actually, when I shot this video the first time, I was doing the math live, and I just couldn't come up with 95%. I came up with 81%, but I went back and did the spreadsheet, and I found that if you look at the 52-week low and the 52-week high of the stock actually in total return gained 108% if you go back to August 2021, which is less than 13 months. So this article that I want to discuss today says, is this the dividend trade of the decade? Referring to Exxon Mobil. And what's most interesting is, if we look here real quick, just to sum up, attention growth investors, a quick stock market question for you. Dividend people, welcome to play too. Look at the chart below. So the chart below, they're referencing Exxon Mobil, been a long day, as the real growth stock in terms of trailing 12-month revenue growth. And the pretenders, according to the article, are 3 stocks that are in Cathy Wood's infamous ARKK Innovation Fund: CRISPR Therapeutics, Block Inc., formerly Square, and Zoom, all of which have been hammered over the last 6 months. But according to this article, and I'm not going to independently go over these because I'm not that interested in these 3 stocks anyway, but it claims Zoom's still up 16% from this time last year, which I'm not sure about that, but whatever. Just follow along for now. Block up 4% and CRISPR 1%. This is revenue, not the stock performance. This is just revenue. So, and again, stable growth, dividend paying company shows stable revenue growth. And when the oil industry really struggled in 2020 during the height of COVID, Exxon still maintained the dividend during that time and has been able to structure itself to where it's in the position that's at today. And so let's look here. It says, ARK fan people, we told you so. In these pages 13 months ago, we said Exxon's 6.1% dividend had 61% upside. They were actually 13 months ago. They were pretty much spot on. They were very close, 61%. It was actually, and I'll show you in the spreadsheet, it was very close, but they're claiming it's dished out a 95% total return, including dividends. I'll show you my own numbers I came up with. So I don't want to provide inaccurate information on this quote, or even if I pull up an article. I like the general ideas of this article. I'm still using it, but the 95% I somewhat disagree with, but I'll show you my own numbers. So, and then according to the article, there's much more to the stock, meaning Exxon Mobil, than just a pretty top line. As income investors, we ask the company to treat their money like it's ours. And according to the author's opinions, they did that. Like I referenced, they maintained the dividend during the whole pandemic when basically the oil industry got crushed. Crude oil hit a price of zero. That's why gas prices were so low back then. Well, there's other reasons too. But that was one of the main things. Let's go back and look at the chart on Exxon Mobil. And I'm not pumping oil company stocks. I mean, I sold one stock I was in, Marathon Petroleum, because it doubled. But I mean, obviously gas prices are very high, and I'm not using this video to pump oil stocks. I'm just saying overall, this has been a fairly stable dividend paying company. So if we go back to October 2020, and wow, do I wish I bought in at this time. I was thinking about it, but I didn't think the oil industry would recover the way it has. So this was $32.62 stock, and it peaked at over $100. Actually, the 52-week high is $105.57. So that's over tripling in value in less than 2 years. That's phenomenal, especially in this market that we're in. Energy seems to be still, and I think it's going to continue to be, a really big play if you're looking for growth and if you're looking for appreciation this year. There haven't been a whole lot of bullish opportunities in this market. I'm actually using different filters and stuff in my own screeners, and I'm coming up with like maybe 8 to 10 in the whole market. So that should indicate what kind of market we're in, if there was any doubt. With that, back to the article. So the 3 Cathy Wood ARKK Innovation Funds, or the stocks, would not pass the same criteria as Exxon. And then this second chart here, they claim again Exxon up 95%, whereas these other ones are all down significantly. And so they're claiming Exxon could be the dividend trade of the decade. We'll see. We're only, 2 years into this decade? But we will see. Now I want to go over my own numbers that I spent time putting together. So this is what I found going to my spreadsheet here. So if you were to have invested $10,000 in Amazon, this is always my standard example, growth of $10,000. So if you had invested at $58.37, which it was 13 months ago, this is where I tried to match the article's claim of 95%, you would have bought 171.32 shares, and it pays a $3.52 dividend, which at the time would have been a 6.03% dividend return. So remember, that's a 6% return right there. If the stock didn't do anything, 6%. And then reinvest that would have gotten another 10 shares for 181.60. And then for total return at a price of $100, that's 18,159.92 from 10,000. So easy math, right? In increments of 10, that's 81.6% return. That's as close as I could get to what the article was claiming. And then I went back and I said, okay, 100 minus 58, 42. That's a 72% rate of return, not factoring in dividends from June 2021. And this is actually what I wanted to do, because you can see here the impact of the dividend return compounded. And this is why this is significant. Like I mentioned in a poll that I posted, there's an article from GFM Asset Management that found that the S&P 500 returns from like 1980 something to 2019 were 75%, including reinvested dividends, or I think 75% of the compounded returns of the S&P came from reinvested dividends. So we can't underestimate the power of dividends. That's why they're talked about so much. That's why there's such a following. That's why dividend videos get so many views, because dividends are awesome. So You see here the dividend, the magnification with the compounding effect. 6% dividend basically translates to 10% impact on the overall return, looking at 81.6% versus 72.41%. Let me just make this a little bit cleaner here, so you can see the rate of return. This is easy math, but just so you can see it in terms of a percentage, it's 81.6%. So we're subtracting this from this. The difference between these two, that's the impact of the reinvested dividend. So where I came up with this 109% return at the bottom, I took the 52-week high, which occurred this month. And then I took the 52-week low, which occurred in August 2021. So that would be August, September, October, November, December, January, February, March, April, May. So that's 11 months approximately. So in 11 months, the stock has returned 102.63% based on the 52-week high, 52-week low, the difference between those two in percent return. The dividend return during that time was 6.76%. So in this case here at the bottom, I just added these two together, and that gave a total return of 109.39%. So that's really awesome. That's a solidly performing growth stock, dividend stock that's crushing Cathy Wood's ARKK Innovation Fund. Now, I think that fund will come back. I think the whole market's going to come back once the Fed switches back to QE from the QT. I think the whole market's eventually going to come back. I mean, they will be cutting eventually. That could, the rate we're going, the cutting could resume at the end of this year. Who knows? But I think this is a really solid example of a dividend and growth stock, of what it can do. And it could still have a lot of room to run. So if you enjoyed that, please remember to like, comment, and subscribe, and keep an eye out for my next video. Thanks for watching.